Hey, this is Justin with DayTradeTheMarkets.com, and I wanted to expand on a couple videos I've done recently. One on the Confluence idea of trading from yesterday, and one on the idea of the breakout trade. There's a lot of different trade ideas that we have, and those are a couple of the latest ones I've talked about. You can click on the more day trading videos link below after the end of this video, and you can kind of check those out. But in terms of the Confluence, there was a really beautiful opportunities today. Right in this area and this area, in that we had our bigger picture bias being down, we had our filter being red at that time, we had a nice resistance zone here, this red zone, even had a deceleration there, and we had beautiful structure in that we had a rejection of a level 3 bar on the high, and then we were also trying to get short right at the high of this level 3 bar made by sellers. So I mean, kind of 4 or 5 pieces of evidence all coming together at the same time. And for more background on this Confluence idea, I recommend checking out yesterday's video if you didn't see that. But what I want to do now is take off the zones and the filter and all of that, and just look at the level 2 and level 3 bars, and talk about the breakout trade idea as well that we talked about last week, and look at why one made sense and why one didn't. I had a question about this today, so let me do that. Okay, so again, I've got today's chart, just first 2/3 of the day before it got a little choppy at the end, and I wanted to talk, and I just have the level 2 and level 3 aggression bars. So level 2 being the dark green, meaning very strong buying aggression, and then level 3 meaning extreme buying aggression, and then level 2 strong selling aggression, level 3 extreme selling aggression. And when we have one of these level 3 bars, like one of this one or this one, it's typically either the beginning of something, the beginning of a vertical move, or it's capitulation and kind of the end, or the blow off, if you will. And so we have an idea that we call our breakout trade, where if we have a high of the day in place or a low of the day in place when one of these bars is formed, if it's with the bigger picture bias, it makes sense to just jump on board because the expectation is for continuation. Now, the bigger picture bias heading into today was down. Okay, so when we had this breakout on the high, rather than just jumping on board, because it's against the bigger picture bias, you want to either wait for confirmation, and by confirmation we mean at least a full bar above the high, or you want to see if there's rejection. And when this level 3 bar did not have any follow through above, and in fact then had rejection below, that's a very good sign. 7 or 8 out of 10 times that the high of the day is in place when we have a level 3 bar on the high or low of the day that gets rejected. Okay, especially if it's in line with the bigger picture bias. So that's a very good sign that the market has probably made the high for the day. Okay, and also that we have what we call our level 3 reversal trade, where we try to get short at the low of this bar. Didn't quite reach it. It came within a point or so, but that was kind of one of the trades that I really like. But that brings us to the next question, which is this level 3 bar on the low of the day when it's formed, and is that a trade that makes sense in terms of the breakout trade? Absolutely, because again, it's with the bigger picture bias, and in this case, we've already seen rejection off of this level 3 bar at the high of the day. Okay, so again, level 3 bar on the low of the day with the bias, pretty good opportunity for a breakout trade. And that's if you're aggressive. If you're less aggressive, then don't want to risk as much, because ideally, we know that the high of this level 3 bar should act as some resistance, okay, which it did here, especially when it's in line with bigger picture bias and other structure. Okay, so if you're more conservative, you wait for the retest up here, and that's what the Confluence trade I showed you earlier, where we had a lot of evidence. We had the filter, which I've taken off. We had the resistance zone, which is here. We even had a deceleration bar there, which again was on that other chart. But that's what I wanted to show. Beyond that Confluence trade that I showed earlier, and let me bring that chart up again. Here that is. Again, this is that level 3 bar on the new low of the day, where you either just take the breakout, knowing that you want to put your stop at least above the high of this bar, or if you're more conservative, you can wait here. And like with anything in trading, there's a trade-off. If you take the breakout trade, you're taking a little more risk, knowing that the market could retrace up to this, but you know you're not going to miss out. Whereas if you wait for the market to retrace to the high of this bar up in here, there's a chance it can take off without you. So it's a trade-off, risk versus reward, or and so forth. So Hopefully that makes sense. The point I was trying to make with this video is what's the difference between this breakout idea and this breakout idea, as well as kind of show another example of a really beautiful Confluence trade idea, like I showed yesterday as well. Hopefully that makes sense. If not, let me know. I'm happy to clarify anything that you might have in terms of this video. And again, I've shown the breakout trades and Confluence trades. We have a lot of other trade concepts that you can use with this tool, with this software that gives you the real-time evidence. If you're interested in that, just shoot me an email and I can send you over some information on some of those other setups as well. I guess that's it for tonight. Have a great Friday, and we'll talk to you soon. Thanks.